It begins without a press conference, without a countdown, without a headline splashed across every screen. One quiet confirmation from the Canada Revenue Agency, a change buried in official language, and suddenly millions of seniors are standing on the edge of something that directly affects their monthly income. From February 2026, automatic senior payments are no longer a possibility, no longer a pilot, no longer a rumor. They are confirmed, locked in, and the consequences, positive for many, dangerous for some who don't understand the fine print, are already in motion. For years, Canada's senior benefit system depended heavily on one fragile step: action by the recipient. Applications, renewals, income reporting, deadlines. Miss a form, misunderstand a requirement, or assume nothing changed, and payments could be delayed, reduced, or stopped entirely. The CRA has now confirmed a structural shift. Starting February 2026, qualifying seniors will receive certain federal benefits automatically, without submitting new applications each year, provided eligibility data is already on file. This marks one of the most significant administrative changes to senior income support in decades, and it fundamentally alters how old age security, guaranteed income supplement eligibility assessments, and related payments are triggered. The word automatic is powerful, but it is also dangerous if misunderstood. Automatic does not mean universal. Automatic does not mean unconditional. Automatic does not mean permanent. It means the CRA will use existing tax and residency data to determine eligibility and issue payments without requiring seniors to reapply, but only if the information the agency holds is accurate, complete, and current. That single detail separates uninterrupted income from sudden financial shock. The confirmation applies primarily to old age security recipients and seniors who qualify for income-tested benefits linked to OAS. The CRA and Service Canada will rely on filed tax returns to calculate income thresholds. This means tax filing is no longer optional in practice for seniors, even those with very low income. Failure to file can now directly interrupt benefits because automatic systems cannot assess eligibility without data. The automation removes paperwork, but it also removes human reminders. February 2026 is not an arbitrary date. It aligns with back-end system upgrades that integrate CRA income records with Service Canada benefit systems in near real time. Once active, eligibility recalculations will happen faster, adjustments will be applied sooner, and overpayments or underpayments will be corrected with less delay. For seniors, this means changes in income pensions, RRSP withdrawals. Employment earnings can affect benefits more quickly than before. The buffer that once existed due to slow processing is shrinking. One of the most critical confirmations is that automatic payments will continue year to year as long as eligibility conditions are met. There will be no annual reapplication for most seniors already receiving benefits. This is designed to prevent benefit loss due to missed paperwork, a problem that historically affected low-income seniors, newcomers, and those with limited digital access. But the system assumes accuracy. If marital status changes, residency status changes, or income sources change and are not properly reported through tax filings, the automatic system will still act sometimes incorrectly, and the correction may come later in the form of clawback. The CRA has confirmed that seniors turning 65 after February 2026 may also be enrolled automatically for old age security if sufficient information exists. This is a quiet but profound change. Historically, many eligible seniors missed months or even years of OAS payments because they did not apply on time. Under the new framework, the agency can initiate payments based on age, residency history, and tax records. However, gaps in records, years spent outside Canada, or inconsistent filings can delay or prevent automatic enrollment. Automatic does not override eligibility rules. It only accelerates enforcement of them. Guaranteed income supplement calculations remain income tested, and automation makes those calculations stricter, not looser. GIS eligibility will be reassessed annually using tax data. If income rises even modestly above thresholds, reductions can happen quickly. Seniors relying on GIS must understand that withdrawals from registered accounts, lump sum payments, or part-time earnings can trigger changes sooner than before. The system will not wait for a manual review. Another confirmation often overlooked is that automatic payments do not eliminate the responsibility to update personal information. Address changes, banking details, marital status, and residency must still be reported. If direct deposit information is outdated, payments can be delayed. If marital status is incorrect, benefit amounts can be wrong. Automation does not fix errors, it amplifies them. From a policy perspective, this shift is designed to close gaps and reduce administrative burden. From a personal finance perspective, it raises the stakes. Seniors who previously relied on slow adjustments now face faster recalculations. Overpayments will be detected sooner, and repayment demands can follow more quickly. This is not speculation. It is the logical outcome of automated cross-agency data matching. The CRA has also confirmed that automatic payments do not protect against compliance reviews. Eligibility audits will continue. In fact, data-driven systems make targeted reviews easier. Discrepancies between declared income, bank records, and benefit amounts are easier to flag when systems are integrated. Seniors should not interpret automation as reduced oversight. There is also a psychological impact. For many seniors, the annual application process acted as a checkpoint, a reminder to review finances, income, and eligibility. That checkpoint is now gone for most recipients. The responsibility shifts inward. Awareness replaces paperwork. Understanding replaces reminders. February 2026 marks the beginning, not the end. The automatic system will evolve. Thresholds will still change. Benefit amounts will still be indexed. Policy decisions will still alter eligibility rules. Automation simply ensures those changes are applied faster and more uniformly. For seniors who understand the system, this can mean stability and predictability. For those who don't, it can mean confusion when payments change without warning. The CRA's confirmation is clear on one point: doing nothing is no longer a safe strategy. Filing taxes, even with zero taxable income, is essential. Reviewing notices is essential. Updating information is essential. Automation rewards accuracy and punishes neglect, not out of malice, but out of design. This shift also affects families and caregivers. Adult children who assist parents with finances need to understand that misfilings or unreported changes can now have immediate consequences. The system will not wait for someone to notice a mistake months later. In practical terms, automatic senior payments from February 2026 reduce barriers but increase responsibility. They eliminate unnecessary applications but demand consistent compliance. They protect eligible seniors from losing benefits due to missed forms, but they expose inaccuracies faster. This is neither purely generous nor purely restrictive. It is efficient, and efficiency always cuts both ways. The confirmation from the CRA is not a headline designed to alarm, but it should command attention. Quiet changes to payment systems shape lives just as much as loud policy announcements. February 2026 is not just another date on the calendar. It is the point where the system stops waiting and starts acting automatically. Seniors who understand this now will be prepared. Seniors who ignore it may only realize what changed when a payment amount shifts, when a deposit arrives earlier or later than expected, or when a letter demands repayment. The system will not explain itself emotionally. It will simply execute. Automatic does not mean effortless. It means relentless. It means consistent. It means the rules apply every time, without exception, without pause. That is the real meaning behind the CRA's confirmation. Stay informed and review your eligibility details carefully. Subscribe and follow for clear updates on Canada's senior benefits and CRA changes.